next step, 401k. Bw'oba omaze okuteekamu ssente, once you start investing money in your 401k, bagenda kukola. I explained this on the last live, but the 401k is just an investment vehicle, meaning it's a basket, ekwata investment zo. Once you put money in that 401k, it actually has to get invested in the stock market. Abantu abasinga, if your employer does it for you, bakuteka mu gye bayita target date fund. So if you have a 401k but you've never gone in to invest or move things around, sente zo zira because I can probably 99% bet it's in a target date fund. Target date fund, the easiest way to invest it, to explain it, is that it's built around the year you're expected to retire based on your age. Nti bw'oba ku myaka gy'olina kati, you're expected to retire in 2050. Your fund is probably going to be called Vanguard Target Retirement 2050 or Fidelity Freedom 2050. It doesn't matter, but it will have the name of the year they expect you to retire, which is usually when you turn 62. So a fund is good for a lot of people abali new to investing over between lazy investors, and that's not a bad thing, by the way, being called a lazy investor. Kubanga sente zigendamu and fund nekola ebyayo. It will rebalance itself. You don't have to do anything until once you get closer. Obviously, we're already far. So let's say Odimu 2050 fund, Mr. G, right? Or what we're still a long time away from 2050. So right now, Sentezo Ziveda Zidi invested mostly in stocks, aka equities, which are very volatile, but the higher the risk, the higher the potential return.
Okay, just a minute in between there. So in Bwembanga, does it have a minimum time to invest? No gamanti bwoba tonaweza gino myaka tebakukkiriza kuvaamu. When do I retire if I choose to?
You mean when do you take your money out? Because you can retire whenever you want.
Uganda njagala genda ne kavangata wange.
So for a 401k specifically, you can take your money out. There are different circumstances. Osobola okugyayo loan ne weewola. So in a loan ebeera different. Teringa loan ya mu bank because you're borrowing from yourself. I don't advise people to take 401k loans. So I'm not advocating for this, but if you're in a situation where you're on the wall, a 401k loan is sometimes, not all the time, a better option than taking a high interest loan from the bank, even though I don't advise it. The thing with a 401k loan is interest rate usually better like 2% or 2.5%. And you don't need a credit check because again, olikwewola sente zo. Sente z'osasula ozizza mu 401k yo. So you're paying yourself back with interest. Bwe zikulema, nothing happens except toyagenda konkona ku njuyo. But let's say weewola $20,000 from your 401k, n'osasulako $10,000 ne bakugoba ku mulimu, n'otasobola kumalayo the other $10,000, the IRS eyo $10,000 egenda zitreatinga nga income. So ogenda kusasula emisolo on that income. And the most important part of your question, Mr. G, is if you take your money out before 59 and a half, pre-tax money especially, you're subject to a 10% early withdrawal penalty if you take the money out as a withdrawal. So bw'ovaawo ng'ogambye ku myaka 45 okooya America, oyagala kudda Uganda naye oyagala kutwala sente zo, you can. You're just going to pay taxes and a penalty. But keep in mind, osobola okudda Uganda n'osigaza 401k nga togiggyeemu ssente. N'esigala ng'ekyakukolera ssente until 59 and a half, then n'ozigyayo without having to pay extra taxes. So I hope that answers your question. Before I proceed, I'm writing down all the questions. Live ndaba kuliko abantu ba US bangi.
Yeah.
A lot of US
thank you so
people.
much again.
I have written down a lot of questions. I just want to let you know that I'm going to
Alex,
answer
waliwo
them.
omusajja atulembeddeko awo mbu stock trader oba ayagala tuguza biki tulina tino atusomesa
Soko
stock
muleke.
trader
Abo baleke.
Keri bw'aba ayogera ku
omusajja atulembeddeko
owa stock trader mumuleke bajja kwogera tujja kuyiga
No.
mpola mpola.
go ahead Sherry
Yeah.
Wamaffe
So 401k, long story short, right? Take a musente. Whoever employer or aqua company match, make sure you're getting a company match. Then the maximum is 24,500, which is something that you don't have to worry about. For starters, the average American does not max out their 401k. I'm not calling you an average American, but wotuuka kwe limit bajja kugamba nti hey lekeraawo okuteekamu ssente mu 401k otuuse ku limit, and they'll send you back your money. So any questions about a 401k in the US before nga tugivuddeko nga tugenze ku retirement investment option endala? About self-employed, you're up next, I promise. I'm writing down all your questions, but I just want to make sure a 401k tuzimaze nga tetunnavaawo.
401k ogikubye budinda kati ne bw'otutwala gy'oyagala ffe
Alex, badde njagala kubuuzaako ekintu kimu because I don't get the American side, which is okay. The people who can get it, that's their own side. I just wanted to ask something before I forget. About the bonds. Sorry to get back to Uganda. About the bonds. There's something Chester Tegera which I would like to have a clarification about. Omanyi wetwagula bonds in 2025 netuzilokingiramu like 16%, yeah? Ezimu wezalokinga ne bagamba nti yabadde ku 17 naye nga real yield yabadde okitegera like 16% or 15 or 16.5. Bwe tunaaba twongerako because we are doing compound interest. Kati bwe tunaakola compound interest, bwe tunaagula nga ziri zaagudde, what happens? Zeeyongera nga twongeramu bwongezi? Do we go back to the initial one? Oba kitegedde kye mbuuza?
In the simplest way possible, nga sikiwanvuyiza nnyo. You just it will work its way out. You just have to keep buying. Okay, your average return will just reduce a little bit, but you just have to keep buying.
So it will just join in.
Yes.
Kati wadde wano zigudde wezinaaba zigudde era kijoininga bujoininzi fe abaagulira mu 2025.
Yeah.
Okay, that's the clarification gye mbadde njagala okubuuza.
Kale back to ababadde balina ebibuuzo bya Sherry ebisinga bya Sherry si byange.
Yes,
munyambeko okulayikinga live samcha bareme gisala kwa kale nzata asinza okusirika ennyo bajja kungirako nnyo
Yeah.
Yes,
Please
Sherry,
like the live. So someone asked, I think JD Longview, my wife quit her job 3 years ago. How does she access her 401k? She's now self-employed. So ngenda kukiddamu 1 and 2. It's self-employment chenzirako, but let me answer the first part. So the main 401k companies in the US, Fidelity, Vanguard, Charles Schwab, Empower, and Principal. So her 401k is with one of those. If she remembers getting any sort of mail from those people, asolo bakubira bajamu buzeebuuzo mannya ge, social security number biki, bamubuulire account ye oba bagirina. If not, asobola okukubira her old employer, just checking in, I had a 401k with you, can you let me know who the record keeper is? Bajamuwa that information. Now to go into it's a good segue into the next question. Jebadengendo kwogerako bambuziza self-employment. So self-employment, the first account that a lot of people start with, and Teri limited kubantu abali self-employed in the US boka, just so you know. It can be used by anyone in the US that earns income, earning a taxable income. It's called a Roth IRA, most people's favorite account. I know in Najideco there were a lot of people talking about a Roth IRA. So a Roth IRA is an individual retirement account. The Roth stands for post-tax, meaning sente zote kama wasasulako da taxes. So it's growing tax-free. It's a very advantaged account when it comes to tax benefits. So, Mr. G, this is an account that I would also recommend for you because, not to judge, but it sounds like you haven't been investing for retirement, so you have some catching up to do, and a Roth IRA can help you catch up faster. So, I would recommend that you also open a Roth IRA. If it's you and a spouse, buli omu asobola okugulawo one under their name independently. Roth IRA, if you're under 50, you can only put $7,500 this year. That money goes up every year, depending on inflation and a lot of other things. But for this year, it's $1 kasanvu bitano. So for people that are self-employed, for people that are stay-at-home moms, but your husband gives you money, pays you money, go ahead and open a Roth IRA. If you have a daughter, your daughter is 18, akola ku Macy's or akola ku Dunkin' Donuts, open a Roth IRA for them. As long as you are obviously legally documented and you're earning US taxable income and you're not making past a certain amount of money, also contributing to the 401k. $7,500, you don't have to put that money in at once. So Sigamint quarter, the entire 7,500 was taken right now. You can if you want to, but you don't have to. Osobola zitekamo every week, osobola kola bi-weekly, osobola kola monthly, whatever works for you. The goal is tosobola kusuka 7,500. And you have until April 15th of the following year okuzimalayo. What do I mean by that? Nti tetunatuuka ku April 15th, which is tax day, meaning osobola okuteeka Roth IRA contribution mu account yo ey'omwaka oguwedde. You just have to let your brokerage company know that this is a contribution for 2025. How to open a Roth IRA? If you type right now, open a Roth IRA, I'm sure Fidelity will be the first account, the first company that pops up. Solo kugula ku Fidelity, Vanguard, Charles Schwab. Wali and Dalen Tono, I personally do not recommend those, but do what you want with your money. The only reason I don't recommend the small companies like Robinhood, Cash App, Barney, Wealthfront is because they are not the traditional companies. Banova, Fidelity, by Vanguard, by Edward Jones, Charles Schwab, Bali, very traditional. These are companies that have been around for a really long time, but in brick and mortar stores. So if you need financial advice, you can walk into a Fidelity office and actually sit down with a financial advisor. But in a customer service, they also create their own funds, buying their own mutual funds on the stock market. So long story short, in my opinion, they're more trustworthy than the smaller ones, abakaja. Temunkuba mayinja, but that's my take. So also hugula Roth IRA, no tekamu sente is the after tax. Sente zosobola okuva mu paycheck yo. You just have to set it up with your HR. Zisobola okuva mu bank account yo, wherever jeziva zigenda munga ziri after tax. It grows tax free, and when you withdraw it in retirement, it's tax free. So it's sort of like a triple advantage account. And then the other thing is you can always take out your contributions at any time without any penalties. So woba oina Roth IRA ngerina 70,000 US dollars. Nayenga kwezo 70,000, you contributed 40,000 and the other 30 is all earnings from the stock market. You can always take out that 40 grand whenever you want without paying taxes on it. Yeah, I think that's pretty much the gist of a Roth IRA. The only other thing I want to mention, abantu basinga gye beerabira, is okugigulawo is just the first step. Once you open the account, you actually have to invest money. So wogulawo account n'oteekamu ssente, you will go ahead and pick an investment. Mr. G, I know he dropped, but he was talking about his risk tolerance being on the lower side. So you can build that portfolio based on your risk tolerance. Abantu abasinga, younger people tend to have a high risk tolerance kubanga bakyali in the market for a longer run. Woba you're in your 20s, you're investing for retirement, okyalina emyaka mingi, right? At that point, your risk tolerance, your portfolio could be 70% equities and a mixture of maybe alternative investments and some bonds in there, depending on your risk tolerance, right? So if you go to Fidelity, if you go to Vanguard and just type in risk tolerance calculator, or taking a, a quiz, and they'll give you your risk tolerance number. You can invest in ETFs. You can invest. I know Alex has a couple of videos on his page. Ngazogera ku S&P 500. You can go in there and invest in mutual funds. Is it tracking a S&P 500? You can invest in bonds, abantu bagala, AI, ETFs, whatever you want, whatever works for you. It's your account. The difference between a Roth IRA and a 401k is that Roth IRA is not connected to your employer whatsoever. So tebi kwatako aboku mulimu. You can get a new job, you can lose your job, you can have no job, and you will still have your Roth IRA because it's your account. With that being said, that means no one is managing it for you unless you ask them to. So if you put money, you need to make sure you're checking your account and making sure it's invested how you want it to be invested. I will say that it sounds like I'm just a champion for Fidelity at this point, but Fidelity has an option where Baku, you can opt in to have their robo advisors manage your 401k for you. So they will ask you a series of questions and they will pick the funds, they will do the rebalances and exchanges. That's an option. Just play around with the different stocks and whatnot and learn. That's also a good idea. Just remember to look up everything, especially expense ratios. Expense ratios are one of those things that people don't learn about until they start making a lot of money. Because when let's say you invest in a fund, actually, you know what? Let me first define an expense ratio before I even go that far. So expense ratio is a fee, or it's a percentage of your investment, and it's automatically deducted from the fund that you invest. So you will never see a bill of an expense ratio. So for example, let's say you choose the VOO, right? The VOO with Vanguard, I believe their expense ratio for that is 0.03%, if I remember that correctly. Alex, you can fact check me on that one. It's been a minute since I looked at the VOO, but yeah, so let's say the expense ratio for Vanguard S&P 500 ETF VOO is 0.03. Kyekitegeeza nti Vanguard echarginga buli investor alina ssente ezo 0.03% of the money. Was I right on that?
Yeah, 0.03 for VOO.
Nice.
SPY is 0.09%.
That's kind of high.
IVV, which is the iShares. The iShares is 0.03%. So
yeah. Perfect. Okay. So kyekitegeeza Zebron nkulabi. Kyekitegeeza ekyo nti for every year, let's say for every $1,000 that you have in that fund as an investor, Vanguard will take 30 cents. Now, when you're starting out, that's nothing, right? 30 cents share. Now, once your portfolio hits 6 figures and it starts to climb, those expense ratios start to come back to bite. They start to come back to bite. So I just wanted to quickly explain what an expense ratio is. It may not be a big deal, but slowly as you learn, it's